base points to 3.5%. Hello. Apologies, there was a timing out there. Please, can you reconfirm whether you can hear me? All right, audio is back. Yes, can hear me. All right, thank you. All right, let me start all over from the talking points. Dollar is struggling for a rebound as Fed, that's the FOMC, left their rates unchanged. This also, alongside some other series of data that fell below their forecast, were what eased up the strength of the dollar last week, even starting up this week as it is. ECB raised their own rates last week, June 14th, increasing by 25 basis points to 3.5%. This has boosted investors' expectations, and this has been the highest of their rates in Eurozone in 22 years. There are several other hawkish statements that were picked from that particular press conference, one of it being the fact that there's still a possible rate hike by next quarter, and the review of the inflation for 2025 upward, meaning they expect inflation to rise more than what it was initially expected for 2025. All of these are signaling a progression in the Eurozone. We've discussed this on this platform severally, that there's a correlation between interest rate hike and the expectation and performance of the currency. So anytime interest rates increases, it's an indication of a possible inflation in the economy. And the layman or simple man's definition of inflation is too much money, money supply, chasing what? Few goods. It's layman reasoning. Going in depth might be more technical, but in the simplest definition, it shows that there's high money circulation. Hence, inflation is creeping in. So anytime interest rate is being hiked, it sends the signal that there's money, there's consumption power is increased for consumers. It lets us know a growing economy, not development, a growing economy. Growth does not necessarily transform into development. Even though growth is a sine qua non for development, but growth can happen alone without development. So growth is what I'm pointing out or referencing here. The JPY has had its issues in the past, and recently also there have been dovish sentiments still lingering on the Japanese yen because of their negative figure rates. Inflation rate, I say inflation rather, the interest rate is minus 0.1%, which is meant to increase the possibility of people going for loans and expanding productive capacity. Analysts do believe too also that the Japanese authorities might end up going for FX intervention policy. So all of this shows that in its own, inherently, the Japanese economy is not growing without much government intervention. All right, and there's also hawkish sentiment around the cable, that's your Great Britain pound, that there might be a possible straight hike, 13th possible straight hike this week when they have their own meeting, the MPC meeting, where they might possibly increase the rate also. If that happens, that's going to intensify or give strength to the GBP. So investors are keenly targeting US employment claims for this week, also the rate hike for GBP and CHF. Let's switch over to Forex Factory so that I can highlight and point out this news for us. So I'm moving over to the browser now. If you can see my screen now, I'm on Forex Factory. Someone should type web. If you can see my screen, I'm on the website now. Someone should type web, Forex Factory website. All right, I've zoomed in a little, so you should be able to see it clearer now. So these were the news from last week for the USD that are coming out all in red. You can see CPI, month on month, the CPI, the core one, year on year, all came negative. See, all of their CPI news. Then unemployment rate was there. This was ECB's meeting last week. This was the FOMC on Wednesday, a day before. So you can see all of this negative news, all in red. Alongside that, dampened the strength of the USD. So for this week, as we all know, most times Mondays are always very slow, and it also builds up what the week should look like on technical basis. So, but you need to have in mind what period during the week those particular trading direction might change based on certain news we're expecting. So I filtered my own Forex Factory page so as only to see high impact and medium impact news. So you can see by Wednesday, we're expecting what? CPI from the GBP, that's from Great Britain, to affect the pound. The Fed chairman is talking on Wednesday also. These are places where you see hints of possible direction and some other policies that are not already noted on their policy documents, but they are part of their intentions. They have the CHF on Thursday, their own monetary rates, whether it will be increased or not, you have it here. And then a tentative press conference after it. Because anytime they release statements like this, at the press conference, that's where people have the opportunity to ask questions and get clarity on some of their policy intentions or those that have been documented as well. Because policy in itself, just as a statement, does not clearly outline implementation and the procedures to such. Then on that same Thursday, you can see the MPC meeting here where we expect GBP to increase its rates. Then you see about employment claims. that same Thursday. Then by Friday, you have some other flash manufacturing PMI and the rest from Euro and GBP flash manufacturing by Friday as well. So can clearly tell that today is a good day to chart our course technically while waiting for those fundamentals in the course of the week. But let me hint you something also when using the strength of fundamental news to trade before we go on to the chart to look at technicals. I've changed my screen. If you can see the new screen, type screen. If you can see the new screen, type screen. I'm no longer on the web. I've moved over to the presentation. All right. Okay. So anytime you want to use the impact or the result of a particular news to trade or the report, and you're trying to get the effect, you've already known that it's a high impact news, it's red. Medium impact affects both indices, stocks, and even currencies. But the one that most of us are always targeting is the high impact, because we know it increases volatility. Always look for where you have higher or more price movement. How do you tell that? Check where the price positioning is on your chart. It's easier to know when you zoom out. Your zoom rate on your MT4 is 5 times. You can zoom in 5 times and zoom out 5 times. Zoom out means you're reducing to see a larger picture. Zoom in means you're closing in on it to see a smaller segment for closer view. So put it at either the 5th zoom or the 4th zoom on your zoom out, meaning you have 3 times opportunity of zooming it in. So at least this gives you a wider frame of the price movement on your chart. So looking at that, you now look for where you have the farthest most space movement. Look at what the price has been doing prior to that, then go to your fundamentals also. Most times you get to see rate sentiment or direction by analysts based on past events. So with all of this, you can already set where you're targeting, but please, I'm not saying you should preempt or speculate the trading. What I'm trying to say is this. Let me put some indications to this so I can see what I'm saying. Imagine you have a news that is negative for the USD. Based on these 4 charts we have here, the Euro USD, GBP USD, USD CAD, and the USD CHF. If a negative news comes for the dollar, we understand that that will reduce the strength of the dollar, hence making the alternative currency stronger. Hence, you trade in that direction. I would prefer to trade on Euro USD and USD CHF in this situation, because you can see by the arrow size that there's a larger portion and space for price movement on those 2 charts. While for USD CAD and GBP USD is already maxing out the total movement. Thereby, you will now realize that's when you see situations where news comes out, Euro USD might be dashing up, then you see that GBP USD moves slightly. That's because already either the GBP has strengthened over the dollar for too long a time, or based on the speculation or sentiment already, GBP has the strength. It doesn't go higher than that anymore. So it's just maybe marginal or fractional movement. But in the case where there's an evenly matched or price is ranging, or the other was the weaker one prior to that time, then it gives more room for price movement. Conversely, if the USD had a positive news that strengthens it, I would rather trade on USD CAD and GBP USD, because in that case, price now is meant to move in the opposite direction of the arrow. And you would now see that GBP USD has more spaces for movement down, same as USD CAD has more spaces for movement up. Please, all together. So those are the ways to target what chart might suit a larger movement opportunity for you when you are using fundamental as a basis for trading. But now let's move on to the technicals and let's see what today holds for us and what the trading week will look like generally. So I'm moving up to the MT4 chart now. I've changed my screen to the MT4. So if you can see the MT4, I'm on Euro USD. Someone just type chart. I'm on the trading chart now. If you can see my screen, somebody should please type chart. All right, we're together. Just as we said that the dollar, you can see based on previous movements, the price has been on a downtrend, and you can see the strong move that has happened now in favor of the euro. Let me go at a lesser time frame. You can see that this major move, the spike, started from 14th, and look at, took effect up until this point. But price has moved way too high. That's the truth. Because anytime you're trading like this and you see all this sharp price movement, very long candles back to back like this, price, based on the rule of moving average, must ease off a little. Price does not move flat in one direction. That is the rule to trading. Just like every other normal business, you know. Price always what? Alternates, ups, down, up, down, and gradually in that zigzag format, picks a direction. So with this higher price has moved on Euro USD in the past few days, and for the whole of last week, which was an uptrend, we expect a correction, which seems what you're seeing now. Let me zoom in a little. Generally, you see that there has been a range zone built here. But if we check it on another trading strategy that I have here, let me set it up. A divergence has been formed here. We have a bearish divergence. Price has created a lower high on the RSI here, but created a higher high here. So trying to target the trigger point so as to know the right time to start your trade, we'll measure this lowest point on the RSI, which by the chart is somewhere here. Let me outline that point out because price has broken it. But for those of us that conservational traders, you might not want to rush into a bearish trade for now. You can see this blue line. This blue line there. So that place there is a very strong resistance to price. And we expect price to come down from that point on. So either you're setting trades there, or you can look for what bearish trades right now on your Euro USD because price has shown a divergence. But please note also, as you're setting your trade, be very mindful of money management, meaning the lot sizing you should use per the capital you have available, and what risk management also, your stop loss and the likes. The closest support you can see to this point here, based on what we can see here from this last candlestick shadow here, the closest there. Look at it, that was 1.09179. While looking at your chart, you can see all of these price levels that I'm outlining there. So looking at the lesser time frame, you can see that is within that range. Once price breaks below here, price can comfortably move on a downtrend. Even though right now it's already in that direction because we all know that price is going down at least for today, tomorrow, until Wednesday when you start seeing some of these things that might change the direction of the market. So for Euro USD, look at what bearish what trades, but also look at what the right entry points. So let's move on to GU. The same thing that we've witnessed, you can see price on the upturn showing the strength of the GBP over the USD, but more like the weakness of the USD. Please always keep that in mind. People at times confuse it. When you're trading a currency pair, the two currencies matter to your trading decision. The stronger one is what you're bothered about. The strength determines which direction of the trade goes. If the strength is in favor of the quote currency, that means a sell trade is right. If the strength favors the base currency, then a buy trade. But also at times, the strength is not inherent in that particular currency, but it is a derived strength based on the weakness of the other currency. What I'm trying to say is, if for Euro USD, if dollar is weak, that weakness makes Euro stronger. Does not mean Euro on its own add its own individual strength. Like in the case of Euro, Euro add its own strength. That's why you notice that the move in speed in Euro and GP are higher than that of the other currencies. By the time we get there, you'll see what I'm talking about. GBP also has a strong sentiment in regards to the rate hike we're expecting this week. Then you see that movement. But for now, we expect price to rebound. You can see it's already on a verified resistance above here, and price is gradually going down. But let's see whether there's a divergence formed in this particular on this chart too. Yes, there is, and the divergence point is still way below the current price right now. So meaning if you are targeting a bearish trade here, this point here is a good take profit level for you. That's this shadow point here. I'm on 30 minutes now, so you can see where I'm highlighting. Even if you go on H1, you still see same, this level here. Once price breaks below here, then you can comfortably sell. But even as it is right now, you should look for bearish trades. And if that's the case, target this point here as a take profit point, because that place can hit price back. Moving on to USD CHF. Price has gone as low as this verified support, as you can see. Price is rebounding, and at a closer range, you can see price is stalling. So it has created a new range point. So before you can think of any trade here, this particular resistance here, where price is struggling, needs to be broken first. But let me also see whether there's still a divergence there. Yes, there is as well. Funny enough, it has broken beyond the trigger point. That's the trigger point there. So for those of us that are conservatives, you might wait for price to get here since it's already ranging. And for those that are not too risk averse, you can hit your trade right from this point because price should go up, or you can wait for this closest high here. You can see where price is at the same point here. I've outlined it also. You can see all of this on your chart. Let me zoom in a little for you to get that clarity. See this shadow here. There's a resistance there, which is the resistance you're seeing here, holding price bound. Once price breaks above there, then you can hit up your own buy trade. So you can see that on a lesser time frame, 30 minutes here, it's showing that that is a verified resistance. That is the reason why it has been holding price bound and is usable. So wait for price to break above that higher level. And from what I can see on my own price chart here, that's above 0.89507. So once price goes above that resistance point, that turns into a support also, thereby giving higher confidence of your trade being protected on the upward movement. So we're looking for what? Bullish trades on USD CHF as well. USD JPY. You see the difference now. Unlike Euro USD and GBP USD, where you had landslide movement in favor of Euro and GBP, on USD JPY, the reverse was the case, and price is even within a range for the whole of dollars. Look at. Let's go to H1 so I can see it more clearly. That while others showed a strength against the dollar, on USD JPY did not strengthen against the dollar as expected. And we've already discussed this as part of the talking points because of the negative inflation rate hike rather in Japan and too much government intervention without the economy really boosting or moving to the point where it's expected. So for USD JPY, the reverse is the case, unlike others. So even though the dollar was perceived weak, kind of, Euro and GBP strengthened, the JPY did not strengthen in any way. Hence, we could not see a landslide downward movement that should have been indicating the strength of the JPY based on the weakness perceived of the USD. That is not the case here. So let's look at the lesser time frame to see possible trades when it comes to the USD JPY. there's a resistance right now. A turncoat support has been hit when this range zone initially was broken. That's at this point here, where price rested on this turncoat support. So rather than just plunging into a buy right now, because price is at the resistance, you have to wait for this resistance to be broken. That means you have to just look for the closest high, as you can see here, because the price movement is still in line with the tenet of an uptrend, building higher highs gradually, broke off the initial range points. This initial range point here, created another, broke beyond it again. This is another range point again, broke beyond it. And this one also will be broken beyond. So it's better to wait for it rather than speculating or envisaging it and allow price to break above here. Either I set a pending order ahead as a buy stop, or wait for price to break above it, initiates an instant execution as a buy on this particular currency pair. USD CAD. Hello, can we still hear me? Please, if you can hear me, someone should type audio. I need to be sure people are following me. Audio. All right, thank you. We'll move on to USD CAD right now. Let's continue. Hope I'm not too fast. All right. USD JPY. I've already said it, that the JPY has its own weakness. Hence, JPY did not take advantage of that weakness dollar suffered last week. And I said that gradually, USD JPY ranged within this zone first, break above it. Ranged again here, broke above it. So the same pattern is seen here again, ranging within this point here, and it's going to break above it as well. But rather than just launching in now, because already the buy is almost closest to the point. See, when it comes to entering a trade, entry is very, very important. On an uptrend, if you enter at the wrong point, you might hold on to higher negatives before you come into profit. And there's no smart trading strategy that keeps you on a drawdown for too long a time before you go into profit. So on an uptrend, you need to target a good entry point, which are support points, or immediately a resistance is broken, as that resistance will also turn to be a support. That's what I'm saying. Look at the highest point of price on your USD JPY as it is right now. Target an entry point slightly above it, either as buy stop or allow price break it first, start your instant execution. Or for those of us that are conservatives, let price break it, then set a buy limit below price, waiting for a retest of that particular resistance, by which time you'll have turned into a support. So that's USD JPY again. Let's move on to USD CAD. USD CAD price on a downturn as well. Here's a turncoat resistance. Let's zoom in slightly. Resistance support the last week. So today, all right, on our 15 minutes, you can see there's a verified resistance above here, and there's an untested support here. So if price breaks this support, pick a retest, then price is still going downward. You can see. So in this case here, price is more likely to break this support. So look for what? Trades against the dollar. We've said it already. All of these other stronger pairs that have their own individual strength are stronger against the dollar right now. And since there's no news today, any reasonable one tomorrow, you are safer trading against the dollar right now. But take note of what? Retracement levels. Because this is what happened here. Price made a retracement here, but now price is going back. I might pick a trend, downward or upward. But the strength is more in favor of what? A downward movement on your USD CAD. So still bearish direction also. AUD USD, as you can see also, upward, meaning an indication of the strength of the AUD, the Australian dollar, the Aussie as against the greenback. Looking closely at your H1, was sensing also that price retraced slightly, ranging, but has gradually created what lower lows and lower highs, indicating the possibility of what a downtrend has started. But you need to wait also for price to break above here first or below. If, let me draw the trend line in this case here. You can see that price is at the top of the trend line for the downward movement here. And also there's a resistance there. So that's a strong point there. That price might go down. But rather than plunging in there, wait first and be sure, because price could shock you and be up. But I expect price to make what a retracement, still going down here, but allow this candle forming on your H1 to finish forming. By the next formation, if your 15 minutes candle finishes up as a bearish candle, look at, you can see here. I'm now on a lesser time frame. You can see the movement here over time. Price has been hitting it back, and the same thing is holding price down now. If that happens, you can target a buy limit at this verified support here, where price made this initial startup back up to get to this upward trend line that is holding it bound downward here. So target a buy limit rather at this verified support here, or wait for price to finish. If the next candle being bearish on your 15 minutes finishes, then you can target bearish trades also coming down, targeting this verified support here as your take profit point. That's for your AUD/USD. Gold has had its own favorable movement last week too, upward and downward all along, just ranging between a verified support and resistance on the higher time frame. But those on the lesser time frame will not see it as such. You can see it here. That price has been within this range and has become even tighter by creating a closer verified resistance here. At the lesser time frame, there's a verified support on your 15 minutes and 30 minutes. The price, yes, I've said it before, that all of the gains in favor of dollar, there's a correction right now. But for gold, price had hit a verified resistance and is also at a verified support. You see it on your 15 minutes. So wait for this price level to be broken. Wait for a retest there. That should be targeting a sell limit trade. Let price break it, but on its way back up, you can target a sell limit trade there for gold for today. You can also see that all of the indices are on the upward. Rate hike has an inverse relationship by record over time with stocks and indices. Reason being that anytime the interest rate is higher or increased, people prefer to keep their money in banks where they can easily get it, but it's still yielding interest for them. That is appreciable, that is reasonable. But anytime the interest rates are left unchanged or lowered, is a disincentive to saving, their consumption increases, or people prefer to now invest this money by themselves or on their own. So anytime interest rates is increased, the stock market or the indices tends to go down slightly. But if it's reduced, they show gains based on the reaction on them, because what that means is with reduced interest rates, I'm not talking from the producer's point of view now, with reduced interest rates, the cost of doing business or cost of funds or cost of borrowing is lesser, which is an incentive for companies to expand their financial budget and spending, because they can easily access loan at a cheaper cost. So I've explained from both sides of the coin now, from the consumer's perspective and from the producer's perspective. And either way, it shows that anytime there's interest rate hike or increase in interest rate, it aids stocks or indices to edge up. It doesn't mean it's an immediate effect on it, but because analysts already know how that will play out, it now informs their decision on the type of trades and where to direct their trades or their portfolio or their investment Hence, you see that anytime they project interest rate hike or increase it, you see those effects on the stocks or indices. So US 30 has been on the upward, same as US 500, as you can see, even US 100. So all of the US indices are looking right now for an upward movement. But please note that with this retracement that has happened past week, the correction should be as good as complete now. Let me set that H1 on the Fibonacci and let's see. All right, price is on an upward for US 30. If you're on a buy trade, you're on the right direction. If you're on the other side, note that below this support here is already a danger. Price is back up. It's a turncoat support. Price has tested it and on its way back up. US 500 is hanging in a balance, but in a lesser time frame, let's see whether there's any support holding it bound there. None. So it's hanging in between your zero level and 23% Fibonacci point. So that might not really stay for long, but for US 30, you're more confident that price will be held at this point. All right, so we've been able to see 1, 2, 3, 4, 5, 6, 7, 8, about 9 or 10 instruments for today that we can target to make something from or in the course of the week. And you can see that the currencies, especially EU, GU, and USD CAD, have a good prospect or better prospect compared to USD JPY and the AUD USD. But that being said, let's see if I have 1 or 2 questions. No, I'm not saying you should buy Euro JPY. I did not analyze Euro JPY. It was USD JPY analyzed. But going by that stroke, because for Euro JPY, Euro has good strength right now. Let me load that. And the JPY is weakened. Let me just see what's happening on that chart. All right, for the person asking about the Euro JPY, yes, you are on track. Euro JPY is still on the uptrend too, but please, there's a resistance right now that I can see. So look at that topmost formation, even though you can't use candlestick pattern formation in a lesser time frame because what you have there, the hanging man, a doji gravestone rather, which should indicate what? A reversal pattern. But price has moved reasonably and could just be a retracement and not turn into a reversal and has moved 60 pips in the opposite direction. But even that movement was not able to create a low as compared to the closest low here. So the only way you can be sure that the strength of the uptrend is still in continuation is when price, even if it's just by a shadow, goes above the highest point of this shadow here, this gravestone here, this shadow here. That is when you're sure that the uptrend is in continuation. If you already have a buy trade on your Euro JPY, no hassle, no problem. But if not, wait for that high to be breached before you can be sure of the continuation of the strength in the upward direction. So that settles it for Euro JPY. XAUSD, that's gold. We've reviewed gold already. I said gold has been ranging also. At the higher time frame, if you look at it closely, price has moved within this set marks that you can see here. It's even tighter now because we all know, like I've said, that Mondays are always very slow. Look at this was the activity from Thursday when it breached and got into here. It has been held within here. But this is also still within the range. If you can see here, that since June 13, it's been within this range here. Look at by our calendar, you can see it here. from June 5th rather. See, from here, price range within this region. The only time it was able to break below it was last week, Thursday, but it's also come back into that same range zone. Look at it here. So price is within range, is within bound. That's why I said on a lesser time frame, I can see a verified resistance above here, where you can target price if it comes above there. Wait for what? A targeted what? Retracement at this verified resistance here. On my 30 minutes, I can see, look at the price here, at about $1,968.15. You can target that. But right now, don't plunge into any trade on this because price is hanging in a balance. Except if you have a good entry point that trades overbought, oversold, or targets support resistance retracement points, or use of Fibonacci levels. Those are the only time. But you can't pick a trend right now until price breaks out of this zone that I've outlined on gold. That's why gold goes with a closer trading technique based on your strategy, rather than just looking at a trend and plunging in. All right, somebody is asking the importance of banking holiday. Anytime there's a banking holiday, it means that there'll be lesser activity on that particular currency. Note, currency, not currency pair. Every bank affects only its own currency, not the other currency in the pair. So that pair might still trade depending if it's just one, but if both of them close, then no trading on such. We have situations like that where both banks are closed, so that pair doesn't move. But if it's just in one particular currency, the pair will still move, but you see lessen activity because one particular bank is not operational. Take, for instance, if a major market, the main market, is closed for transaction in a particular city or in a particular community, people will still trade at the other particular market, the smaller stores on the streets and the areas. But you notice that the influx of persons to the main market will be totally cut off. So anytime there's banking holiday, there's always a reduced activity on that particular currency, and then it might affect the trading capacity of that currency pair. So that's the importance of banking holidays. USD CAD is not on upward trend. I showed the chart earlier on. USD CAD is on a downward trend. What is about US 100, US 30, US 500. See, the way I'm getting some of these questions, someone just asked US 100, buy or not? You don't just plunge into a buy. There are conditions you look at. It's just like crossing a road. If it's a dual carriage road, you're told, or it's a double lane road, that look right, look left, then look right again. Because as when you have looked at your right and you're looking at left, something might have happened at that point that you're no longer conscious of because you had already changed your focus from there. What I'm saying is all of the US indices and stocks are on an uptrend right now. But on an uptrend, if you place a trade at the point of retracement, it will take you on a drawdown that might be higher than your risk setup, thereby taking you out of the trade. So rather than plunging into because it's on an uptrend, target when price retraces to a support, then you join the movement up. Because the trend is your friend, like we always say. You know that the possibility of a drawdown there will not be much to the point that you throw you off that trade. Or wait for price to break above the recent high, which will now form a new support. So that is the way to target buy on any of the US stocks. How to know when to enter a trade? Please, entering a trade is a function of the trading strategy you're using. The beauty is that Rally, we have different trading strategies. We've taught you within class, either the fresh pips, the trend profit maker, the hybrid, the profit pro max. All of these have different trading techniques. Just like the divergence I showed us here, it's a different trading strategy and a different trading technique. And every technique for any good trading strategy it must offer you three things. First off, your entry point. Second, you must know your direction, whether it's a buy or sell. Third, it must show your exit point. At what point should you end this trade? If these three things are not obtainable with your trading strategy, please change it or learn it better or adjust it to suit this. You need these three. You must know what type of trade you should place based on your trading strategy, whether you buy or sell. You must also know where your right entry point is and where your right exit point is, so you don't leave yourself unduly exposed on any trade. Then also keep in mind that different trading strategies suit different trading instruments or techniques better. Some trading strategies are not for scalpers, they are for trend traders, while some are okay for scalpers. So please, you need to put all of this into perspective when choosing your trading strategy. All right. I think we've handled enough for today. We'll be ending today's session now. Please, any other question you might have, you can direct it to your account manager or direct it to me through your account manager. My name is Olabisi Olaleru. For those of you asking for the support and resistance, your account manager has a software or the link to this plugin as well, and they can share them with you. So please do reach out to your account managers. Any other question you have, direct them to them or to me through them and to be resolved. Thank you for joining today's session. Let's have a peaceful week. Enjoy your trading week. Goodbye. Apologies for those of you that cannot attempt and take all of your own questions also. Time is fast spent, and this is the much we can take for today. Thank you. Bye.